Welcome back. 30 days, that is the clock. In roughly 30 days, the United States Senate votes on something that could permanently change this asset or let the window slam shut for years. Most XRP holders have no idea what either outcome actually does to the price. That is exactly what today covers. So let's break it all down. The bill is called the Digital Asset Market Clarity Act. Plain English version. Right now, every major U.S. bank, every pension fund, every asset manager sitting on billions of dollars wants to add XRP to their operations. But they cannot get proper legal sign-off. Their compliance teams say the rules are not clear enough. Not technology, not demand, paperwork. The Clarity Act fixes that. XRP gets classified as a digital commodity under federal law, same category as gold and oil. The legal barrier disappears. Institutional capital gets the green light. This bill already passed the House last July. 294 votes in favor, 134 against. Bipartisan landslide. The Senate stalled it for 2 months over one argument: whether stablecoin platforms can pay yield to holders. Banks said no. Crypto said yes. 10 days ago, Senators Tillis and Alsobrooks announced the dispute is 99% resolved. The Senate Banking Committee locked in a markup vote for the second half of April. Markup clears committee. Full Senate vote follows. Full Senate passes. President signs. XRP's legal classification changes overnight. Brad Garlinghouse publicly puts the probability at 90%. Polymarket, where people put real money on outcomes, prices it at 48%, below a coin flip. That gap between insider confidence and market pricing is either your opportunity window or your warning sign. That's the story on the surface. Underneath, the data is screaming something else. Start with institutional intent. Coinbase and Ernst & Young surveyed 351 institutional investors. 96% manage over $1 billion. These are hedge funds, private banks, venture firms, family offices. 25% plan to add XRP in 2026. 18% already hold it. 68% said they would buy single asset altcoin ETFs tracking tokens like XRP and Solana. The appetite is not a rumor. It is documented and published by some of the most credible institutions in finance. But here is what the actual money is doing right now, and it contradicts the survey entirely. XRP spot ETFs launched in November 2025. 43 consecutive days of positive inflows, $483 million in December alone. Peak AUM, $1.65 billion in January. Then March arrived. 4 positive inflow days. 4 so-so value data, negative 28 million net for the month. CoinShares global data, negative 130 million. First negative month since launch. Weekly inflows collapsed from over 200 million at the December peak to under 2 million per week by early March. AUM now roughly $1 billion. The same week, XRP ETFs bled 28 million. Bitcoin ETFs pulled in 767 million. That is not a rounding error. That is institutional capital making a deliberate choice. Goldman Sachs holds 153 million across 4 XRP ETFs, the largest single institutional position on the board. Bloomberg analyst James Seifert characterizes it as trading desk activity, not long-term conviction capital. 84% of XRP ETF holders are retail. Only 15.9% institutional based on 13F filings. Compare that to Solana ETFs, where institutional participation is 48.8%. The institutional adoption story is still mostly intent on paper, not capital in the market. That's the case for, now the case against, because both sides have receipts. Standard Chartered published a specific threshold, $20 to $40 million per week in ETF inflows to start creating real supply pressure on XRP's price. We are at under 2 million. At that pace, ETFs add roughly $100 million by year-end. 100 million does not move an $85 billion market cap. ETFs are providing a floor, not fuel. Let me slow down here for a second and make sure we are all on the same page. The survey data says big institutions want XRP. The ETF data says the money has not actually arrived yet. Both things are true at the same time. We are sitting in the gap between intent and deployment. And the Clarity Act is the bridge that connects them. Now let's look at what's actually controlling the price. Reality check, because if you don't get this part, nothing else helps. Now I'm about to show you why every single one of those catalysts got swallowed by a red candle. 4 forces overriding every bullish signal this month. Force 1, the Federal Reserve. March 18th, rates held, but the inflation forecast was raised to 2.7% PCE for 2026. Dot plot, 1 cut for the entire year. Markets price no cut before December. High rates keep capital in yield-bearing instruments and out of speculative assets. Every week the Fed holds is a week the XRP investment case gets harder. Force 2, oil and the Iran conflict. U.S.-Israel strikes starting late February pushed oil above $93 a barrel. Higher oil feeds inflation. Higher inflation gives the Fed less room to cut. Powell's own words, near-term inflation expectations have risen, and this is exactly the kind of thing that causes trouble. Chicago Fed's Goolsbee. The war makes it impossible to separate tariff inflation from energy inflation. Maximum uncertainty for policymakers equals maximum hesitation. Force 3, tariffs. 15% global U.S. tariffs enacted in February are now hitting consumer prices directly. Polymarket briefly priced the probability of an actual rate hike, not a cut, an actual hike, at 22% in March, up from 8% in January. If that scenario develops, crypto markets face severe selling pressure across the board. Force 4, Bitcoin dominance and correlation. XRP tracks Bitcoin 80% of the time with 1.8 times the amplitude. Bitcoin has ground sideways between 65 and 75,000 since the February crash. Bitcoin ETFs have bled 3.8 billion in outflows since January. That is not rotation into altcoins. That is institutional money leaving crypto entirely. Until Bitcoin breaks higher and dominance falls below 55%, XRP rallies get sold. Here is the contrast that defines this market moment. Ripple Prime added to the DTCC post-trade clearing directory March 2nd, direct access to infrastructure processing quadrillions in U.S. securities annually. Licensed in 70-plus jurisdictions, $100 billion in payments processed. 25% of the world's largest institutional investors plan to add XRP this year. All of this is real. And XRP closed March at 1.38, down 3% for the month. Fundamentals set the destination. Macro sets the timing. Let me show you the data that makes me hesitate even with everything I just laid out. The XRP ledger is genuinely active. Daily transactions near 12-month highs, driven by RLUSD stablecoin volume and the beginnings of real-world asset tokenization. Binance listed RLUSD last month and approved it as perpetual futures collateral. But here is the key distinction. In cross-border payments, the receiving bank converts XRP to local currency immediately upon receipt. Transaction volume does not equal holding demand. Growing ledger activity confirms the infrastructure is being used. It does not guarantee price appreciation. Now the walls, 3 price levels. 3 locked gates, each one has billions pressing down from above. Gate 1, 1.45. XRP has tested this zone multiple times in 2026 and been rejected every time. A clean daily close above it, not a wick, a full candle close, is the first confirmation that sellers are exhausted. Gate 2, 1.50 to 1.55. Approximately 1.85 billion XRP accumulated at those prices by buyers now at break-even. When price recovers to their entry, they sell to get their money back. A ceiling made of people trying to get even. Gate 3, 1.60, XRP tested this level earlier in 2026 and immediately formed a textbook bearish reversal candle, 3 layers of supply stacked between current price and anything exciting. On supply, Ripple released 1 billion XRP from escrow this month, relocked 700 million, 300 million XRP entered circulating supply, roughly $400 million in potential sell pressure every 30 days. Known quantity. Consistent headwind. Here is where we stand. XRP closes March at 1.38. 3 resistance walls above. Macro headwinds active. ETF outflows confirmed. Most important vote in this asset's history, 30 days away. Let's stop talking about what happened and start talking about what comes next. 4 signals. Watch these. Signal 1, the Senate draft text release. Before the markup, the full bill text drops, possibly this week. When it does, markets get something concrete to price. No major surprises in the language means XRP reacts before the actual committee vote. This is the first domino. Signal 2, weekly XRP ETF inflows. Standard Chartered's threshold 20 to 40 million per week to create real supply pressure. We are at under 2 million. If Clarity Act momentum builds, institutional desks will start allocating ahead of the law changing. Recovery above 10 million per week is the first sign that survey intent is converting to capital. 2 more weeks below 2 million means the ETF story is stalled regardless of Washington. Signal 3, price level 145. One clean daily close above this level on volume opens the path to 150, 155. If it holds as resistance again, the pattern extends and the grind continues. Signal 4, the April Fed meeting and the Warsh transition. Fed meets late April. Technically, Jerome Powell's final meeting as chair before Kevin Warsh, Trump's nominee, takes over. Warsh is viewed as more hawkish. If Warsh signals fewer cuts before even taking the chair, the market reprices the entire rate path. A hawkish incoming Fed signal during the same week as the Clarity Act markup creates direct opposing pressure on any rally. The bull scenario, markup happens on schedule. Draft text releases without surprises. Weekly ETF inflows recover above 20 million as institutions front-run the regulatory change. Bitcoin holds above 70,000 as oil pulls back. Standard Chartered's $8 year-end target becomes the base case. XRP breaks above 160 for the first time since February. The path to $2 opens. The bear scenario? Markup delayed again. Iran, Senate scheduling, or DeFi provisions push the bill past May. Senator Moreno's warning about midterm timing proves correct. Weekly inflows stay below 2 million. XRP grinds between 125 and 150 for the rest of 2026. You don't need to guess which scenario is playing out. You just need to watch these 4 signals. So let me bring this all together. XRP closes March at 1.38, down 3% for the month, trapped between the best institutional fundamentals in its history and the most hostile macro environment in years. The fundamentals have never been better. The institutional infrastructure, ETFs, DTCC integration, global licensing, survey intent has never been more developed, and the macro wall has never been higher. The next 30 days will answer the question that defines XRP's year. I will be covering every development: the Senate draft text release, the committee markup, the ETF flow data, and the Fed meeting every single day on this channel. Tomorrow, the full Senate Clarity Act draft is expected to drop. When it drops, I will have the full breakdown within hours. Don't miss it. The next 30 days will answer the question that defines XRP's year. Until next time, stay sharp, stay informed.